afternoon, traders. It's Bill Baruch with Blue Line Futures. It's your daily midday market minute. The dollar's trying to wake up, and you know what that means. But before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. The dollar's trying to edge higher. It's a little bit of a safe haven move here. Comes on the heels of China's data miss last night. Industrial production, fixed asset investment, retail sales. Though unemployment did tick a little better, but that was very disappointing from a consumption standpoint, and that hurt commodities. But it's also revved up the U.S. dollar, especially against the Chinese yuan. But we're seeing the dollar continue some of that strength here today. You had some mixed sentiment data from Europe. And then some talks. It's the Fed really not pulling back on showing their cards. And this is something we've talked about over and over again. The Fed cannot telegraph a pivot. They cannot pivot until the moment they are ready because of the market's reaction function. So we've been hearing some pretty tough talk this week. Atlanta Fed President Bostic yesterday talking about no cuts in 2023, and I think everybody's on board with that. But he did emphasize probably a pause if he had to have the decision today. However, Barkin, the Richmond Fed president, did say today that you don't want to pause too early. You should stay at it. Something of the sort of staying at it we learned from the 1970s. I think some of those comments did help get the dollar going. We've heard some hawkishness from Mester. They are 2024 voters. We do got Dallas Fed President Logan later today. She is a 2023 voter. So the Fed speak is out there. Retail sales was somewhat mixed. If you take out gas and autos, it did beat. The control beat. But the headline and the core number both missed. You also were in line to miss, but you had some revised as well for March. The data right there wasn't good. We had the New York Empire State Manufacturing yesterday. That missed. So we're starting to actually see some of that hard data come in poorly. But again, I'm not in the camp that says that we're going to be, this signals a recession, because I do think that there's a lot there, a lot of momentum behind the economy. And the Atlanta Fed GDP, is holding pretty steady above 2%. So a lot of this is something here to digest as the market, I have been calling it lumpy. And you know what? The S&P is consolidating. Today might be one of the tightest ranges as that pennant consolidates right at our pivot and point of balance, 4138, 4140. And then the NASDAQ, though. The NASDAQ's breaking out. And we've been talking about it. We love tech. Tech is breaking out, and we're getting that test into 13,500. Now, we're kind of coming back off of that 13,500. Today's close will be paramount in how we kind of play out through the middle part of the week. We got some different earnings, but obviously some cyclical earnings, some with Walmart and Target coming up. There's some tech companies like Synopsys and Cisco I'm keeping a close eye on as well. But the AI momentum is clearly there. Home Depot missed today. They talked about lowering their forecast, lowering their guidance, missed top and bottom line. So there's just a lot of lumpiness out there right now that you got to work through, kind of try to sift through. And it's really all about the dollar. So I'm coming back to the dollar. The dollar strengthens here. It's going to weigh on risk assets. Today, you look across the board, a lot of red out there, and that's really defined by the U.S. dollar strengthening. You also have yields bumping up a little bit. So this debt ceiling, you don't know what kind of reaction the debt ceiling talks are having on yields, and if they're weighing on the treasury market and you could get a relief afterwards. There's a lot out there, so it's more about staying nimble. But the equity markets, like I said, the pivot, point of balance, the S&P, 4138, 4145, that's been just kind of tethered right to that, while the NASDAQ is holding up to basically trying to hold what would be a new closing high. The Dow is down 2 to 250. So there's just a big divergence that continues there. All the levels are laid out in the Morning Express. Nothing really changed since the morning. Moving on to crude oil, $70 continues to be a battleground. We got API after the bell. We've seen the market respond to that. Positive comments from IEA today talking about raising their oil demand forecast for the second half of the year by 200,000 barrels per day. They're also looking at a demand outstripping supply by 2 million barrels per day, I believe, later this year, second half of the year. So that helped underpin a little bit of a response to the $70 level. A lot of technicals there, too. Be interesting to see how inventories from API later today lead into the EIA. So stay nimble there, but $73 continues to be that headwind of a ceiling, and we got to close really back above 75 before they really can start repairing to repair that damage and kind of give us more of a clear shot to $80. But until then, a lot of resistance overhead, but the market's responding to support, and the real story today, with that dollar strength, with the treasuries lower, is the metals, and the metals are hinging on that China. So coming full circle with that China data, that poor data today, overnight, from China, started weighing on copper, weighing on silver, really ahead of the European Open, and we're seeing copper set new lows, silver kind of hang out at a new low, gold finally surrendering 2,000. It was a heck of a battle there for gold. I think you start to see closes like this on a daily session. We're in for near-term pullback, and that's okay. I remain longer-term bullish across the metal camp, just because, I do think when the negativity is just bubbling like it is right now, there's so much pessimism out there for China, for the economy. If you're able to kind of just see these prices, these metals at a better price, I think there's going to be buying opportunities, and you need less of a good news later on to have an impact in the market. I think that sets the table pretty good. I think gold too, it's going to have its day to shine, but you can't ignore last week where 2 weeks ago we failed at that 2080 area again, in 2620 last week in silver. So there's just a lot of, this is sort of coming in a little bit. I'm welcoming some more weakness in order to find that as a buying opportunity. So stay tuned. I'm here. Our trade desk is here. We're ready to feed questions, talk about the metals, talk about anything that's going on. So please don't hesitate to reach out. 312-278-0500. Remember, futures trading involves substantial risk of loss. Is not suitable for all investors.